Bitcoin has been taking a beating since the Securities and Exchange Commission approved a slate of ETFs. When will the carnage end? The Securities and Exchange Commission (SEC) approved a spate of Bitcoin ETFs on January 10, leading to speculation about how markets might react in the weeks ahead. Surged to $49,000 in the hours following the announcement before sinking to just more than $43,000 as of January 12, impulsive moves that perhaps few observers found surprising. Yet, with Bitcoin's halving set to occur in April, there is little agreement about what might happen next. For some analysis, we asked some Cointelegraph staffers and authors for their thoughts. Keep in mind that the last time we asked for predictions, some were off by up to 5 figures, so don't consider this investment advice unless you are looking for tips to lose money. Tom Blackstone, reporter. The price of Bitcoin ended up barely breaking through resistance by December 31, ending at $42,265. That's $2,265 above the upper range of where I thought it would be a few months ago, so my prediction was off a bit. History shows that halving years show very high price increases compared to the years before them, so I expect Bitcoin to be much higher by the end of this year, though June would be much too soon for a rally to come. By the end of the year, I expect it to hit a new all-time high. I don't think the ETF news will have much of an effect beyond the first 2 months or so after the decision is made. CT, where do you think the price of Bitcoin will stand on June 30th? TB. I think it will be above $47,000. Lucas Kiley, Chief Investment Officer at Yield App. We may see some sell the news action, but only from some short-term traders. The hodlers are not selling, and certainly not before Bitcoin's halving, which has been the catalyst for a huge rally every single time in the past. The number of long-term holders sits at around 76%, which is higher than at any other point in its history. We will see a minor pullback, but it'll be nothing to write home about. It may take a little while for it to surpass the $50,000 threshold. But by June, the halving will be out of the way, and the price should be higher. The magnitude will depend on many factors, of course, not least the macroeconomic backdrop. We also know it usually takes time for the halving to impact the price, so we may need to be a little patient in waiting for a new all-time high. Ray Salmond, Head of Markets. Bitcoin's long-term price action is likely to be influenced by the size and consistency of inflows to the ETFs, and the corresponding reports at the end of the first and second quarters. It will be interesting to see how institutions reposition their portfolio allocations to BTC and what sort of consumer and retail products emerge over the coming year. In the short term, attention is likely to pivot back toward Bitcoin's halving in April, and the impact this has historically had on price. Personally, I'd be content with seeing Bitcoin consolidate in the $50,000 to $56,000 price range for the next 2 or so months. Eventually flipping $58,000 to support and gaining further strength going into the halving would be great. BTC price on June 30. Between $55,500 and $69,420, but there are too many factors that can't be considered that could occur. This is why Bitcoin won't crash 30% after the ETF decision. The percentage of long-term Bitcoin holders is sitting at about 70%. If you are counting on them to jettison their supply at $46,000, you might be disappointed. Amid the Bitcoin Exchange Traded Fund (ETF) mania, wild price predictions have flown around. Even if the Securities and Exchange Commission approves the ETFs, many anticipate a sell the news event that will drive Bitcoin's $42,956 price 30% below current levels.
However, I don't see this scenario playing out. In fact, there's a convincing argument to predict Bitcoin will rally another 10% from current levels above the $50,000 mark, before pulling back slightly in the short term. Having spent several decades working in traditional asset management, I know that when BlackRock publicly states something, the market should pay attention. BlackRock appeared certain in the days leading to January 10 that approval would be granted.